Hey traders, hey to my YouTube subscribers, hey to my COT Academy fam, and hey to everybody who just clicked on this video. What's good YouTube? What's good people? Hope you guys are having a wonderful trading week, and I still pray and manifest that this week doesn't end in a bad way, but it obviously ends in a great way. That's your boy Harlem, King COT, and we're back with another video. So today guys, I want to share with you guys a quick message, or let me just say not a quick message, but I want to give you guys a hint, a simplest hint into how you have to simply approach the markets in 2024, or let me just say how is it like the simplest way to use the hourly time frame to your advantage and to advantage your profession and to grow your trading accounts, not only your trading accounts, but your confidence in a trader and your consistency, and far most importantly, your discipline. But before I get any further with the video, make sure you smash the like button, you subscribe to the channel, you share the video, you comment in the video, you click the link to sign up with the broker that I highly recommend. Or if you're looking to watch my daily live vlogs, you can still do that. Or if you're looking for a legitimate forex trading course, COT Academy has came up with 3 courses. We're having a 3-day one. We're having a 3-day one-on-one course. We're having that simple one-on-one course, that basic one-on-one, and we're having that 30-day Zoom one-on-one online course. So you can choose which do you prefer and which you want COT Academy to assist you with, and let us do the rest from there. But without further ado, guys, let me share this wonderful gems, and let me give you guys this wonderful game so you can not only benefit for now, but for the coming years and decades, right? So today I want to show you guys how you can use the hourly time frame to your advantage when price is bullish, right? The coming day on Friday, I will share how to use the hourly time frame to your advantage when price is bearish. But this is mainly the same thing. How we approach the markets will never change, but what will make it different, it's how you as a trader capitalize once you see something like this, right? So you guys know that traders we trade different, right? There's traders who trade breakouts. There's some traders who trade like a close above a certain zone or close below a certain zone. Some traders trade like impulsive moves, right? Like once price impulsively violates a certain zone, that's when they hop onto trades, right? But in this instance, I want to show you guys how you can capitalize every time price violates a certain high, or how price moves every time you're creating that higher high, higher low anticipation, on how you can capitalize every time you're trading above a certain zone, like your resistance or your buy zone, your sell zone, or let me just say the pivotal zone which price is failing to break above, right? So on the hourly time frame, guys, I want to show you guys like 2 or 3 examples, right? And then for the coming day on Friday, I'll show you guys on being bearish, right? So you can clearly see that obviously structure of the NASDAQ, we are in a downtrend, we are in an uptrend, right? So with price having this uptrend, creating this high, creating this, like with price being in an uptrend and starting to hold a word and starting to hold a range, right? There's 2 things that we can be looking for once price creates a range. Are we gonna break above to continue bullish, which is the main one if price is in an uptrend, or are we gonna break below to be bearish, anticipating a possible reversal if price is in an uptrend, and the opposite if price is in like a bear trend, right? So we see price created a range, and we see price created a range, and we see price created a word, a range, and we still saw that obviously price also created what, a range here, right? So there's there's 4 ranges that I just marked out, guys. I want to show you guys how you can capitalize as a trader, or how you can put your money to work anticipating those continuation long positions, or those buy direction, right, or that bullish direction, right? So from price having this range, we now know that okay, we're having this high, right? This is our high right here. This is just our basic high, this high and this high, and this is our low right here, right? So let me remove this and this and that. So you guys know that okay, we're having this high, and price created again, and price tapped again on this very same high, and we had another tap on this very same high. So price eventually had what? Price eventually had a close above. Price eventually gave us a close above this very same high, right, or break out of that high. Like I said, some traders prefer saying it's a close above, some saying it's a breakout, or some say it's an impulsive move to the upside, violating a certain zone that we were looking to sell on if it stayed below. Do you guys get that? But in this instance, price simply had a close above our very same zone. So from price having a close above, you now understand that okay, our direction is in an uptrend, right? And price created a certain range until we had a close above that very same range, and until price anticipated that obviously with a close above that certain range, there's a high possibility that price will continue moving to the upside. And in this instance, once you saw that price gave us a close above, that's when we had that's when you might have anticipated continuation trades to the upside once the current candlestick traded above the previous candlestick that violated that zone that we anticipated to continue moving to the upside on. Do you guys get that? So you can now understand that okay, price had a range, and price had a close above the certain range, or a breakout, or a break above the certain range. And once price had a break above, the coming candlestick traded above that previous candlestick that violated that zone, anticipating that now we are good to anticipate what a move to the upside. And once you see it, that's when you can understand that price gave us the clean trade and we anticipated that moves to the upside. That was trade number 1. Trade number 2 on this very same range. Same thing, right? Same thing, same thing, same approach, nothing changes, very same range. We're having those highs right here. Price was just on a correction and had some type of small depletion right there. So again, we're having a range, right? So again, price has a range. So from having a range, we're looking for two things. Are we going to violate above to continue bullish because it's an uptrend? That's the most important one. Or are we going to have a break below and anticipate that reversal to the downside because we're in an uptrend? The opposite if price is bearish, right? So obviously we can see that price has been holding this range for some time until we had this candlestick on 1400 p.m. So CAT, Southern African time, right? Until we had this candlestick violating our highs impulsively. Like I said, some traders prefer breakout, close above, or an impulsive move, right? And in this instance, you can tell that okay, price was holding this range until we had this impulsive candlestick that violated our highs or our range, right? So once price violated this highs or this range, we now are good to note that okay, price might do it, might continue moving to the upside, but it's mainly based on what, on how you approach it. Are you gonna be an impulsive trade? Are you gonna take it impulsively, or are you gonna wait for the candle to close so you can wait for the coming candlestick to trade above that candlestick that violated the zone so we can simply continue moving to the upside? Do you guys get that? And when you look at it, we went impulsive on this one and price moved to the upside. Do you guys get that? This is trade number 2 in an uptrend. Now the third one, same approach. Price hit this high. Price hit this highs. Price created this highs, right? This higher high, and we tapped again on this higher high and came back again on the higher high, and we also created lows, right? So once you see that okay, price was holding this high and pushed to the downside, came back for the very same high, pushed to the downside, came back again, pushed to the downside. Once you see that okay, price is now holding this highs or this range or this resistance, whatever that you can say it is, the only time we can put our money to work is once price gives us a violation, either to the upside nor to the downside, because it's a range. And in this instance, price had a break above, right? So once price closed above this very same zone, you can see those 3 candlesticks right there. Once we had price closing above the certain zone, we now understood that from the candlestick that closed above and the coming candlestick trading above the candlestick that closed above, we now can understand that we are good to go and anticipate the continuation to the upside, because price had a range, price closed above that range, and price had a candlestick breaking above the candlestick that violated that range, anticipating that the momentum is now stronger for us to put our money to work and anticipate what, long positions. Do you guys get that? So this could have been what, trade number 3 in an uptrend, right? So let me share the final one with you guys and then I dip, right? So we're gonna use this one, this possible double top. So you can clearly see that, okay, price created what? Price created a higher high, a higher low, a higher high, and a higher low, not violating this high, not violating the low, the two lows, right? Not violating this low, anticipating that, okay, price is in a range, right? So once price is still holding this range, all we need to do is to put our money to work. Once we get a violation, once price closes above that certain range, that certain resistance, or those highs in general, that's when you can anticipate further continuations to the upside. And when you look at it, guys, you can clearly see that price has been holding this range until we had what? A breakout. Those two candlesticks violating our highs and closing above our highs, with the coming candlestick trading above the candlestick that violated that zone and still anticipated a stronger move to the upside. Do you guys get that? So this approach is the simplest approach, because price action will forever be king. It's mainly based on you as a trader. What do you do once you see something like this? Do you capitalize or you don't capitalize? It's up to you. Do you go impulsive, or do you wait for a candle close, or do you just wait for further confirmations once price has violated that zone? It's all up to you as a trader. But this is the simplest approach that you can use when you're trading the hourly time frame, or when you're trading a uptrend, or when you are sticking to one pair that will help you benefit. Like in this instance, this is the NAS. I've been using this for over 2 years and 3 years now on the NAS, and I've been using it on gold, in USD CAD, and Tesla, and Bitcoin, and they've been working perfectly fine for me. That's why I dropped this video for you guys, so you can see the benefits, capitalize on the benefits, and win as a trader like we are already winning. You guys get that? The coming video will be on Friday, where I share how you can capitalize in a downtrend using the same approach, using the same mindset, using the same skill, and using the same time frame and the same pay, just to show you guys the authenticity, and just to show you guys that this is not for views, this is not for subscribers, but this is to make sure that it hits someone's mindset and touches someone's trading and learning career, and make sure that they better themselves as a trader like I've already did. Do you guys get that? But without further ado, this is your boy Harlem, King COT, and we signing out.